Hey, listeners, are you ready to take control of your car buying experience and make smart financial decisions? Introducing the Ultimate Auto Finance Guide, your go to resource for navigating the complex world of auto finance. Whether you're a first time buyer or looking to refinance, this guide has all the tips, tricks, and insider knowledge you need to secure the best deal. Don't miss out on this opportunity to empower yourself and drive away with confidence. Head over to www.ultimateautofinanceguide.com now and grab your digital copy. Trust me, it's the smartest investment you'll make before buying your next car. Welcome back to Drive to Success Mastering Auto Finance, the podcast that helps you decode the numbers, master the strategy, and stay ahead of the curve in auto lending. I'm your host, John Lewis, and today's episode is all about a term you've probably heard tossed around in meetings, investor calls, or dealer updates: SAAR, the seasonally adjusted annual rate. If you ever wonder what SAAR really means, how it's calculated, and why it should matter to credit analysts, lenders, dealership managers, and anyone in the automotive space, this episode is for you. What is SAAR? Let's start with the basics. SAAR, or seasonally adjusted annual rate, is a metric that projects total annual vehicle sales adjusted to smooth out seasonal fluctuations like tax refund season spikes or holiday dips. It tells us if this month's pace of sales continued all year, how many vehicle sales would be sold? Here's a simple way to think about it. Say 1.25 million vehicles were sold in May, but May tends to be a high sales month. So statisticians adjust that figure for seasonality, and let's say it becomes 1.1 million in SAAR adjusted terms. Multiply that by 12 and you get a SAAR of 13.2 million. That's the expected annual pace of sales, seasonally smooth. It's essentially the economic heartbeat of the auto industry, and it's updated monthly, giving us a real-time pulse on buyer demand, consumer confidence, and economic pressure points. Why does SAAR matter to us in auto finance? Let me break it down in four key areas. Number one, forecasting and planning. SAAR is a crucial forecast tool. A high SAAR signals strong consumer demand, so lenders can prepare for higher application volumes, dealerships increase inventory, and OEMs ramp up production. On the flip side, a drop in SAAR often means tightening credit, scaling back risk, and preparing for loan defaults or slower originations. Number two, credit strategy alignment. If the SAAR drops 2 months in a row, many credit departments will reassess their scorecards, LTV policies, and rate markups. Subprime lenders especially watch SAAR like a hawk because their margins depend heavily on volume and default risk management. Number three, dealer relationship management. If you're managing a floor plan, credit line, or indirect loan program, and SAAR is trending down, you might get early insight into a dealer's stress level. It helps you proactively adjust credit limits, collateral audits, or reserve agreements before risk gets too high. And finally, number four, product development and incentives. Captive lenders often base lease programs and APR incentives on sales trends. A declining SAAR may trigger aggressive lease residuals or rate buy-downs to stimulate demand, especially on slow-moving inventory like trucks or SUVs or even EVs. Now let's look at SAAR in the real world. Let me give you a real example. Let's say it's July 2025 and the monthly auto sales are reported at 1.3 million vehicles. The seasonal adjusted factor for July is 0.96. So SAAR equals 1.3 million divided by 0.96 times 12, which would give you 16.25 million. That means if July's pace continues, the U.S. would sell over 16 million vehicles this year. That's a strong SAAR, and lenders might open up the credit box a little bit wider, loosen restrictions, or increase promotional offers. Now let's flip it. If SAAR drops to 13.5 million for a couple of months, that's a red flag. It can mean inflation is biting, rates are too high, or consumers are pulling back. Now let's talk about SAAR as a performance benchmark. Another powerful use of SAAR is benchmarking your team's performance. If SAAR is 15 million and your indirect lending unit financed 150,000 vehicles last year, that's 1% market share. You can track this ratio month over month or year over year to evaluate performance. It's especially valuable for floor plan credit analysts since their dealers' new car turn rates, curtailment cycles, and exposure levels are all tied to sales velocity, which SAAR reflects. How to stay updated on SAAR. If you're in credit, operations, or even on the sales side, you need to stay on top of this number. So where do you find information about SAAR? You can go to sites like motorintelligence.com, coxautomotive.com, autonews.com, wardsauto.com, or even your monthly OEM reports. Most major auto media report SAAR at the start of every month for the previous month. Bookmark those sites or set up email alerts. Let's wrap this up with a few key takeaways. SAAR isn't just a sales stat, it's a strategic signal for everyone in the auto lending ecosystem. Use it to adjust credit strategy, forecast volume, and manage dealer risk. Build a habit of tracking the SAAR monthly and share insights with your team, especially in underwriting or dealer services. Remember, auto finance isn't just about approving deals, it's about understanding the forces that drive demand, risk, and opportunity. SAAR helps you see the road ahead. Thanks for tuning in to Drive to Success Mastering Auto Finance. If you find this episode helpful, please share it with your team and leave a review so we can help more professionals master the world of auto finance. Keep driving towards success.
Rolling down the avenue to a jazzy beat, following that rhythm, life's a one-way street. Chasing dreams with passion, every mile's a goal. In the world of finance, stories to be told. Catching the horizon with a soulful groove. Navigating numbers, got nothing to lose. Every calculation, every deal we sway. In the realm of autos, we find our way. Drive to success, we're mastering the art. Through the lanes of finance, we set apart. Jazz and soul, where the numbers align. Make your journey smooth with wisdom divine. Hit the keys of knowledge, let the insight play. From leases to purchases, every savvy way. Revving up those engines, zeros turn to ones. In the studio of life like morning sun. Feel the soul, embrace the jazz. In the auto world, let's razzmatazz. Financial gears shifting smooth and slick. In the podcast lane, we find the tricks. Cruising through the jargon, ain't no mystery. Unlocking all the secrets in auto history. Low ones and rates, they glisten like the stars. Drive the distance, no matter how far.
Thanks for sticking around until the end. Before we go, if you're in the market for a new or used car or even thinking about it, you must check out Drive to Success, the Ultimate Auto Finance Guide. It's packed with strategies to help you navigate the tricky world of auto financing, avoid costly mistakes, and get the best deal possible. Head over to Amazon and grab your copy today. Just search for Drive to Success, the Ultimate Auto Finance Guide, or use the link in our show notes. Take control of your car buying experience and drive away with confidence.